So before we can start our accounting course and do all the numbers and process the transactions and calculate profits and so on, we need to know the rules of accounting. And they kind of tell us what to do and when. So let's look at some balance sheets from three real world businesses. We've got Apple here, that's an American company. On the left-hand side, we've got assets, and they're broken into current and non-current. We'll learn what all this is later on, but for now, we just see they're over on the left-hand side. And on the right-hand side, we've got the liabilities, which are also current and non-current, and we've got owner's equity. And the two sides balance, those numbers equal. We've also got the same report, a balance sheet, for a British company called Virgin Media. Assets on the left, liabilities and owner's equity on the right, and we can see the current and non-current and the totals that. And lastly, we've got the same for an Australian company, Qantas. Assets on the left, liabilities on the right with owner's equity, and the assets and liabilities are broken into current and non-current. So accountants in three separate countries prepared these reports in the exact same format, treating transactions the same way. So how does that happen? And that is because accountants in all towns, states, countries, how do they know what to do? Well, we've got some rules that we follow. And these are pretty much universal. They do, it's little things differ in each country about taxes and, incentives and stuff like that. But for the most part, the rules we're going to learn are pretty much universal throughout the world of business. And what are those rules? Well, they're going to tell us how to record transactions, when to record transactions, what to do in certain situations, how to classify transactions, so is it this or is it that, and how to prepare those three financial reports. And what we're going to do is break those rules of accounting into two groups and learn them one by one. There's quite a bit to learn, but we're just going to break it down into two groups. So the first group is what's called accounting assumptions. What are they? They tell the accountant how to record the actual transactions. So the things that happen, this group here tells us how to record those. And on the other group, we've got qualitative characteristics. They're slightly different. They tell the accountant how to prepare the three financial reports. And so what we need to do now is break them into two groups and sort of break them down. And there's going to be 10 that we need to remember. We're going to give each one a number and a letter. So accounting assumptions, starts with A. So the first one we're going to do is accounting entity. That's going to be A1. We've got the going concern assumption. That's going to be A2. A3 is the period assumption. And A4 is the accrual basis assumption. We'll look at some other ways to remember these, but for now, this is accounting assumptions. That's the A group, and we've got 4. 1, 2, 3, 4. So in the other group, we've got qualitative characteristics. So that's going to be our Q group. Q1 is going to be relevance. Q2, faithful representation. Q3, comparability. Q4, verifiability. Q5, timeliness. And Q6, understandability. So we're going to do two things now. We're going to go through each of these one by one and learn what they are and how to apply them. But also we do need to remember what goes into what category. And is it an accounting assumption or a qualitative characteristic? Because often the exam says you can only pick something from one group or the other. So if it says accounting assumptions, for example, and you give a beautiful answer for relevance, you won't actually get any marks because it's wrong. It's not from that group. So we also want to do that while we're doing it. Try and come up with memory tools that we can use to put these sort of in the correct group whenever we get a question.